All right. Good morning, everybody. Good morning, all you magnificent melon heads of the world, and happy Tuesday, everybody. Today is August 11th, 2026. 500 billion. That is the latest from the large number generators over in the AI bubble. $500 billion, the 1/2 part of a trillion, is what they're all getting together as Wall Street circles the wagons around Nvidia, much the same way the financial press circled the wagons around Nvidia years ago and told you to ignore me when I warned about exactly what they're currently doing. $500 billion worth of financing for Nvidia's customers. That's courtesy of Apollo, Blackstone, BlackRock, KKR, and Goldman Sachs, some of the biggest asset managers in the world, who are all managing trillions of dollars of other people's money, and they're all setting a whole bunch of it aside for the sole purpose of keeping Nvidia's revenue inflated. Notice, not for the fiduciary duty that they owe to their customers and their clients in order to allocate their money in the best possible way to maximize their returns while minimizing their risk. No, it's all about keeping Nvidia's revenue inflated. And man, I just tell you, when the dust settles from this bubble, the lawsuits against these firms are going to be spectacular. But the problem is there probably won't be much left of these firms to sue. And so, guys, all I can tell you is it might be prudent to take steps to get your money the hell out of any of the funds being managed by these people, because it is not about protecting your nest egg. It is about inflating Nvidia's revenue. And all of this money is being spent on an unproven technology with an uncertain rate of return that is currently zero. It's very important. There is currently no rate of return whatsoever in any AI, only the hardware manufacturers. And now $500 billion on top of the trillions that has already been spent is now being gambled on this unproven technology. And it is all being held up by two companies, Anthropic and OpenAI. The money's being put into bond offerings and debt offerings from special purpose vehicles, paging Enron. And special purpose vehicles is where they create shell companies, and all the debt that they're taking out goes in those shell companies. That way the parent companies don't have to report that debt, and they can deceptively make their own balance sheets look better. And that way, when that debt goes bad, you can't go after the parent company's other holdings. So again, it's a whole bunch of extra risk for the investors, all aimed at protecting big tech. They're using compute power as collateral. So if this experiment fails, the only collateral that you can seize is now worthless. Because why would this debt go bad? Probably because something happens at OpenAI and Anthropic, who are like 80 to 90% of the market for this compute. And so if they can't pay to use it, what is that compute worth? The collateral is worth nothing in the event of default. Nobody's talking about that. And of course, there's very little details being offered about this deal, which apparently is little more than a memorandum of understanding, which, I can write MOU on a Post-it with $1 trillion price tag next to it. That doesn't make it worth $1 trillion, but I digress. Nvidia is likely the backstop for all of this. That's what they're not saying. Kind of like how Nvidia's $250 billion of backstop that they're exploring for OpenAI, that's probably included in this $500 billion number. So let me ask you this. Let's say this debt does default. And let's say you seize the compute, and the compute is not worth what they paid to buy it, which it almost certainly won't be worth when these data center operators start to default. What happens to Nvidia's revenue in that scenario? Does Nvidia even have the money to backstop all the debt? Because if something happens at OpenAI and something happens at Anthropic, and they're no longer renting compute at a loss, massively so, then that compute is not worth that much, and nobody's borrowing more money to build even more of it. So Nvidia's revenues are in the toilet in that scenario, and so Nvidia can't even backstop the debt. It's all the same crowded AF trade on the same unproven technology, and they are putting everybody's money into it. The numbers are now so big, there is almost nowhere left to hide. All right, they're sneaking this stuff into bond funds, pension funds, 401ks, and IRAs, people who have no idea they're invested in data centers. Half the people who are at these town halls protesting data centers don't realize their own nest egg is already invested in this shit. It is everywhere. And now they're adding 500 billion more to it. And I tell you guys, if you think the regulators are going to protect you, they won't. Get this. The SEC has eased securitization rules for data center bonds. All the rules that were put in place after the GFC, after the mortgage bonds all went bad and they said, wow, we shouldn't make this mistake again. So we're going to put rules in place about disclosures. We're going to put rules in place about risk retention, where the issuers of the bonds have to retain ownership of some of them. That way their interests are somewhat aligned with the investors they're marketing to. We need to have investor protections to make sure if the losses go bad, the investors are somehow protected. All those rules, thanks to the SEC yesterday, they don't apply to data center bonds. Well, how about that? At the same time, they're putting everybody's money into this stuff. The regulators are backing off and saying, you know what? We don't need to watch this stuff. Again, guys, I can't tell you what to do with your money. All right. I don't have the little permission slip from the government that says I'm allowed to do that. I can tell you all the people who do have that permission slip are all putting your money into the same garbage. My money will not be touching any of this shit. And again, it's all held up by Anthropic and OpenAI. Mostly OpenAI. OpenAI is like 70% of the market, but Anthropic is like another 25 to 30% of it. And then you got like a couple of other little guys that are also sprinkled in there. But it's all the same levered bet on two companies, two massively loss-making companies that are hopelessly dependent on this endless influx of capital to keep burning it to keep this bubble inflated. So let's check in with these companies. What are they up to? Anthropic is having meetings with potential IPO investors where they're fielding questions and downplaying concerns about competition from cheaper Chinese models and public backlash against build-out of data centers. In other words, Anthropic's like, don't sweat all these problems that are going to kill our business because we've got an IPO that we're trying to get out the door sometime in September or October. And they're just telling the investors, don't worry about it, bro. Really? The Chinese are selling what you're selling for 1% of the cost, and you think that's not a problem for you? That's not a problem for me, your investor? Yikes. Meanwhile, at OpenAI, this is fun. OpenAI just bought back $7 billion of stock from employees. All right, so all this money that OpenAI is raising from like Nvidia and other investors and Blackstone and BlackRock, all this, what are they doing with the money? They're buying back stock from employees. Why are they doing that? I thought those employees were about to get their big payday. OpenAI's IPO, isn't that just around the corner? Isn't that when the employees cash out all the share-based compensation they've been collecting over the years? And the IPO is going to go so well, so they're going to make all that money on the initial public offering. Oh, but that's right. The CFO is terrified of the public getting a look inside their books and doesn't want to take the company public, even though Sam Altman's trying to force it out the door, kind of like Dario is. OpenAI's IPO may never get done now. And so rather than let the rank and file walk out the door, OpenAI is saying, well, we've got this billions of dollars we've raised from investors. Let's use that to buy back some of the shares so our employees actually have some money and they don't all quit. It's not something these two actions, these meetings where they try to reassure investors everything's great and then buying back shares from your own employees ahead of an IPO. These are not the moves made by confident companies. These are desperate moves. And again, this is all happening in the backdrop of $500 billion of your money being blown into this bubble in a desperate effort to keep it inflated. And the financial press is not asking difficult questions. They're holding roundtable meetings where they fawn like schoolgirls at a Beatles concert over these guys. They are not doing their job. Nobody is doing their job in the financial services industry or in the financial media. There's a couple of guys on Substack and YouTube who are trying to warn people for years, and the financial media is just like, oh, don't pay any attention to those guys. Just pump everything, every dollar of everybody's money into the same levered AF trade that we all just watched blow up spectacularly in South Korea. Anyways, yeah, so that's happening this morning. I knew I was going to be wound up on this. I knew it would probably get some veins sticking out of the side of my head when I was covering this topic. How'd I do? Why don't we move on from this one? All right. Hanwha has offered $1.2 billion to buy Austal's U.S. operations. All right. Austal is an Australian shipbuilder that has the majority of its operations, believe it or not, in Mobile, Alabama, here in the United States. And Hanwha is one of the biggest shipbuilders in the world out of South Korea. And they are bidding $1.2 billion for the loss-making Austal U.S. operations down in Alabama, where they make modules for the Virginia-class submarine that General Dynamics and Ingalls Shipbuilding are building. And they also built the Independence-class littoral combat ship, which was just an absolute disaster of a defense procurement process. Austal is, again, they lose money mostly because of that littoral combat ship fiasco. Hanwha is investing big in U.S. shipbuilding. They also bought the Philly shipyard right here in my neck of the woods. They call it the Hanwha Philly shipyard now. All this money we're pumping into data centers, we should be pumping into shipbuilding, and we're not, and we're going to regret it. But at the very least, the South Koreans are investing here in the States. Meanwhile, we've got Libya has said that they may declare force majeure after drone attacks on their Zawiya oil hub. This is interesting. Not a huge story yet. It's like 130,000 barrels per day. Barely a rounding error in the context of the global oil market. But this is a new brush fire has just popped up in Libya when we've already got these raging infernos in the Strait of Hormuz, the Bab el-Mandeb, and Russia and Ukraine. So we've got yet another geopolitical uncertainty developing in the oil markets. They don't even know who did it because there are various factions vying for control in Libya, but they are now targeting oil infrastructure with drones in another place. Oh, good. We got the biggest copper smelter in the world just shut down. Meanwhile, copper prices were already hovering near all-time highs, so that's going to be interesting. We'll talk about that one. And last one of the day, Trump Media. I just love to talk about this company, Trump Media. And look, guys, I get this a lot. I am not suffering from TDS. I voted for the guy, but I call it like I see it. Trump Media is a crooked shitco. They lost $238 million on $1.7 million in revenue. And the only hope for this company is insider trading as a service and fusion. We're going to talk about that one a little bit at the end as well. Guys, we got a lot going on today. Why don't we shrink my big melon of a head? Let's see what's going on in the world of finance. Don't forget that like button and the subscribe button for the algorithm so you can come back and have your coffee with the melon heads tomorrow, because we do this every business day. And right now, the S&P 500 is positive. It's up by 14 points, or 0.19%. Now, there are two candles that I would draw your attention to. The first one, these are 5-minute candles, by the way, 7 a.m. Eastern time today. You see this big green candle? That was this one. Deal or no deal in first squawk at 7:03 a.m. Pakistan signals the U.S. and Iran are close to some arrangement. That's according to the Pakistani interior minister arriving in Tehran. All right, so stop me if you've heard this one. A deal any minute now. Okay, that's enough to send stocks higher and oil lower this morning. But then you'll notice a few minutes later, we got this red candle at 8:20 a.m. See that one there? Well, that was this one from First Squawk. U.S. fired on Panama flag ship early Tuesday. This was a ship that was running the Iranian blockade. And so we're so close to a deal that we're still blowing up each other's ships. There was also several attacks in the Bab el-Mandeb Strait, and the Iranians attacked a boat in the Strait of Hormuz this morning, and then the U.S. fired on a ship. So, yeah, we're so close to a deal that we're all blowing up each other's boats, and you can see it in these two candles. For whatever reason, the market keeps reacting to these stories of a deal any minute now. I don't get it, but it works, and so they're going to keep doing it. Meanwhile, the Dow is higher by 60 points, or 0.11% higher this morning. And the NASDAQ is up 112 points, 0.38% to the upside. All three indexes in the green ahead of the open. The U.S. dollar is unchanged this morning at 99.81 for the DXY. And looking over at the bond market, we've got yields are in the red this morning, but they were up rather sharply over the last couple of days. And the 10-year in particular, pay attention to that one. The 30-year for now, 5.238. That's lower by a half a basis point. Now, the 10-year is down a point and change at 4.686, but you'll notice the high overnight. We went to 4.736. So we are flirting with that 4.7 level once again. Interest rates are still climbing, even though they're down for the moment because of that headline about Pakistan says a thing about a deal. I would not expect that to last much longer. The 2-year yield, meanwhile, 4.222. That is lower by almost 2 basis points. And the 1 month is unchanged at 3.701. Looking over at Bitcoin, we are at $64,263, up about 350 bucks off of yesterday's low. Bitcoin remains range bound over these last few weeks. And looking over at the commodities board, we've got gold is marginally higher. Come on, give me 44. Give me another buck while we're sitting here. No, I'm not going to get it. All right, $4,398 for spot gold. It's higher by 0.2%. We were as high this morning as 44.35. Spot gold's looking pretty good here. Spot silver, meanwhile, is down a little bit, 1% lower, off by about 68 cents at $65.04 for spot silver. We were briefly above 66, almost 66 and a half this morning. I like the shiny. We've got copper is at higher by 0.7% this morning. Again, we'll talk about copper towards the end of the show. Platinum up by about 0.75%. Palladium down by 0.4%. And WTI crude is lower by 0.33% here, 81.84 for September WTI futures. So let's talk a little bit about this. 7 o'clock a.m., that was that headline about the Pakistanis say, okay, we've got a deal coming any minute now. Trust me, bro. That took oil down by about $1.50. Then we had about 8:20 was the story. There we go. That's the lead up there. That was the blowing up of the ship not the blowing up, the attacking of the ship that was trying to run the blockade. Not sure what happened at 9 on the dot. We did have a little bit of a decline as well here. But oil still range bound here, low 80s to the high 70s, where it's been for a couple of days. All right, let's talk a little bit about this Nvidia story, though. Nvidia taps Wall Street for $500 billion funding commitment. And again, guys, just take a minute to appreciate the size of this. Another $500 billion that the bond market is going to come up with somehow. Where's it going to come from? It's going to come from you. That's the important thing to realize. This is now your money is being gambled on this. You may think, oh, I sold the risky funds, or I minimized my exposure, or my guy tells me I have a well-diversified portfolio of stocks and bonds. No, you don't. It is all now in the same levered AF trade. That's the important thing to realize here. Your bonds and your stocks all are either guaranteed by, issued by, or being paid for by the same handful of companies. And all of that is dependent on OpenAI and Anthropic being able to continue operating at a loss indefinitely until they somehow, some way figure out how to make a profit eventually, even though they're nowhere near profitable. All right. Everybody is in this, and no, you are not diversified, even if your guy tells you you are. Chances are your guy doesn't even open the freaking prospectus of the fund he has put you in. Meanwhile, U.S. investment giants, including Apollo, Blackstone, BlackRock, and Brookfield, are partnering with Nvidia to source $500 billion in financing for artificial intelligence infrastructure. The coalition, which also includes Goldman Sachs and KKR, will create dedicated pools of capital, your money, at significant scale at attractive rates for NVIDIA's customers. They're doing this all for NVIDIA because the whole market is NVIDIA. That's according to the statement on Monday. NVIDIA CEO Jensen Huang said in a CNBC interview in his stupid leather jacket that he approached only the 6 firms for the commitment and none turned him down. I doubt that was true. The effort comes with a huge headline figure, but few details on the timing and structure of the financing or how much the plan goes beyond the string of AI deals that are already driving a large chunk of Wall Street's biggest transactions. That's important here. They may be taking credit for hundreds of billions of spending that has already been announced with this $500 billion number. Executives indicated that it will focus on debt financing to provide access to compute for NVIDIA's largest customers, and that there are already many deals in the works that would qualify toward this commitment. The money will all be third-party capital, Huang said in the CNBC interview, which also features executives from each of the 6 Wall Street firms. BlackRock CEO Larry Fink said on CNBC that the future deals will offer high credit quality and allow attractive yields in debt for investors who are over-invested in equities. And again, I cannot stand the combination of these 2 paragraphs. All right. First of all, this is all third-party capital. Don't worry, bro. It's other people's money. It's certainly not NVIDIA buying their own chips from themselves that they've been doing for years. Yes, it is, because they're not saying it right now, but I guarantee it soon, within the next few days, we'll find out that NVIDIA is backstopping all of this shit. So yes, it isn't all third-party capital, because at the end of the day, Nvidia is co-signing for all of this. And then Larry Fink saying this is going to offer high credit quality. Well, the only way you get high credit quality from special purpose vehicles is by somebody like Nvidia co-signing for it or guaranteeing it, and that these will offer attractive yields for investors who are over-invested in equities, as if suggesting this is going to help investors diversify. Oh, you have too much money in Nvidia stock. Why don't you diversify by buying Nvidia's debt? It's the same damn trade. This isn't diversity. It's just putting the shit in a different box and calling it something different. It's the same thing. And again, the deals will use compute power as collateral for the debt, which, by the way, if that debt ever goes bad, the collateral goes bad right along with it. So it's collateralized by hot air. And it will also take the form of private offerings as well as bonds by special purpose entities, according to a person familiar with the matter. Special purpose entities was the accounting trick that was used by Enron in order to hide the debt using shell companies so they don't have to report the debt that's being taken on in their quarterly earnings. And everybody can talk about, oh my God, the robust tech earnings supporting this market. It's accounting tricks. It's how they hide it. It's also how they insulate themselves from any accountability if that debt goes bad. They don't have to pay for it. The shell company pays for it. Oh, the shell company can't pay for it? We're sorry. Better luck next time, investors. Those vehicles could issue as much as tens of billions of dollars in debt at a time and then lease compute to Nvidia's clients, said the person who has not to be identified, discussing private plans. And then all these guys got together on CNBC for this CJ session. And of course, CNBC asked no hard-hitting questions. And I got to send a shout out to Jim Chanos, who posted this one yesterday. It's not out of the realm of possibility that the next time all of these guys are at the same table explaining AI financing is before Congress in 2031. And all I can say, Jim, is it's going to be sooner than that. It's not going to be 2031. I agree. The next time we get all these guys in the same room, it's probably going to be at congressional hearings while they're looking for people to blame. And they certainly won't want to hear from the people who predicted this exact outcome 3.5 effing years ago. They certainly won't want to hear from those people, especially not after spending years telling everybody to ignore those people. Nvidia stock currently higher by 1.6%. It was down yesterday after this story was announced. They lost 2.8% yesterday. Why would Nvidia not rise on a story about $500 million being set aside $500 billion being set aside just to spend on this one company? Because the market knows this story is bullshit. That's why. Full disclosure, I am short Nvidia. Meanwhile, SEC exempts data center bonds from key securitization rules. That's great. At a time when we're putting every retail investor and every working class guy in the world, his nest egg, his savings is all being put into the same thing. This is a great time to reduce investor protections on those very instruments. SEC exempts data center bonds from key securitization rules. The SEC has made it easier for data center owners to sell asset-backed securities, potentially opening the door for more debt sales as tech firms scour Wall Street for ways to pay for artificial intelligence. The SEC said a major subset of data center securitizations don't need to have disclosures and investor protections that similar deals require. That includes risk retention, a requirement that companies issuing asset-backed securities retain some of the debt to better align their interests with investors. In a letter last month, staff wrote that the data centers aren't financial assets that liquidate over time, like loans or leases, and therefore bonds tied to them aren't subject to the same rules as debt backed by car loans or home mortgages. These things absolutely liquidate over time because this is a rapidly depreciating asset on a very short obsolescence cycle. This is almost worse than car loans or home mortgages. They don't last anywhere near as long. The letter was written in response to a query from Latham and Watkins, a law firm that advocated for clarification of the rules. The requirements that the SEC staff said don't apply were generally created after the 2008 GFC to protect investors from excesses in securitization markets that ultimately brought about the near collapse of the banking system. Oh, good. What a great time to reduce investor protections as we're putting $500 billion of other people's monies into this shit. Oh, that's just great. Guys, if you're sitting there saying, don't worry, this bubble's not going to collapse, they would never let that happen. Oh, do we need to? I think we need to bring this out. I think we definitely need this one for the duration of the show. Understand, they are clearing the road ahead to allow this to happen. Not only are they letting this happen, they are helping this happen. All right. So if you're relying on some nameless they to protect you from this, they are not. They are helping do this to you. That's the important thing to remember. The SEC is a worthless organization. There is no point in even having one at this point because they don't freaking do anything. And you'll see at the end of the show when we talk about Trump media, it's a joke now. You got a sitting president doing insider trading as a service. Seriously, just disband the SEC. Just get rid of it or call it something else. At least change the acronym so maybe we can refresh it with a different name for a few years and act like something's changing. All right, so meanwhile, you got Anthropic tries to shore up investor confidence ahead of blockbuster IPO. This is not something that a confident company has to do. The company is racing to public markets this fall and has fielded tough investor questions from Chinese rivals, Trump-era tensions, and amid the AI infrastructure boom. Anthropic is meeting with potential investors to shore up confidence in what could be the largest IPO of all time, offering assurances about its rapid pace of growth and strategies it expects will help address a growing public backlash against AI. The $965 billion AI juggernaut is staring down a host of fresh challenges that are leading investors to take a more critical look at the company's business, including the recent popularity of cheaper AI systems made in China, tensions with the Trump administration, and a growing backlash to data center construction across the U.S. These are all things that are going to kill this company. The fact that the Chinese are offering the same product for 1% of the price, okay, maybe it's not quite as good, but it doesn't matter because their product isn't actually that good anyway, and it's 1% of the cost. Yeah, they're never going to make money with this stuff. The Chinese are now dumping AI on the market for the sole purpose of bursting this bubble because the Chinese know we have created a huge vulnerability. We've done this to ourselves, and now the Chinese are trying to pop the bubble for us. In recent weeks, investors have pressed Anthropic executives on such topics in pre-IPO meetings, asking them what effect they might have on the company's growth. People familiar with the discussion said. The conversations reflect the tremendous uncertainty that still exists about who will win the AI race and the financial stability of the businesses that underpin it. Anthropic has recently emerged as the frontrunner in that race, powered by the success of its hit coding tool, Claude Code. But there's also backlash against the company in Silicon Valley, where many chief executives have grown nervous about its power over the AI ecosystem. The price Anthropic sets and the company's performance after the IPO will set the stage for investors to value top AI developers. Trillions of dollars in AI spending, most of which is going towards securing compute resources, largely rests on the assumption that demand for the technology will continue to rise precipitously. Company executives have played down the impact of Chinese competition in meetings, telling investors that Anthropic is hyper-focused on offering cutting-edge AI models. CEO Dario Modi and other top AI leaders have publicly said that most users want the most intelligent AI systems available at any given time, suggesting that Chinese systems are less of a threat since their capabilities generally trail those of top AI models by at least a few months. Yeah, that is just not true. Yeah, maybe the Chinese models or the U.S. models are a little bit better than China, but for 1% of the cost, even Microsoft is looking at using these Chinese models now. And Microsoft has tens of billions of dollars invested in OpenAI. And even they're looking at using the Chinese models here. Anthropic is targeting a public debut in September or early October, people familiar with its plans said. Its top rival, OpenAI, is now expected to follow in an IPO that could be as late as next year. Guys, I think that IPO never happens now. I really do. I mean, I'm surprised the SpaceX one happened. It didn't go particularly well. SpaceX rallied and then crashed. Anthropic is delayed. OpenAI is delayed. I don't think the market has the liquidity available for two more $1 trillion IPOs. Speaking of OpenAI, they just bought back $7 billion of employee shares in a tender offer. And again, you don't do this if the IPO is right around the corner, so it's probably going to be delayed again. OpenAI has completed a deal to help employees sell roughly $7 billion worth of shares in the company ahead of a possible Wall Street debut. That's according to a person familiar with the matter. The ChatGPT maker bought back shares from current and former employees rather than tapping outside investors for the tender offer, said the two people who spoke on condition of anonymity, as the information is not public. The deal valued the startup at $852 billion, unchanged from its most recent funding round. I think it's key here, the fact that they did not tap outside investors. They used $7 billion of the money that they had previously raised at the $852 billion valuation. Capital is vital to the survival of OpenAI here. And they just burned a not trivial $7 billion of that capital in order to buy back shares from their employees to keep their employees from leaving, probably. And they didn't raise outside capital to do that. Maybe, just maybe, that's because they were not able to raise that outside capital at that same $852 billion valuation. Maybe the story breaking that OpenAI had to reduce their valuation to raise that $7 billion would have been more damaging to the company's story and the narrative about the AI bubble than burning that $7 billion was. Just maybe. Anyways, things not going particularly well at the Frontier Labs this morning. But, that's cool because another $500 billion of everybody else's money is being poured into this garbage. All right, now let's talk about the shipbuilding here. Hanwha offers to buy Austal's U.S. unit for up to $1.2 billion. This is what we should be investing in, is shipbuilding, not these stupid data centers that make chatbots that tell us to glue our pizzas together. We should be building ships. Hanwha Aerospace has made a preliminary offer to acquire Austal's U.S. shipbuilding operation for up to $1.2 billion as the South Korean company steps up its efforts to capture a greater slice of rising global defense spending. Austal will allow Hanwha to undertake due diligence to firm up its bid, the Australian company said in a statement Tuesday. The company's share surged as much as 12% in early Sydney trading, lifting the company's market value to $1.8 billion. That's 1.8 billion Australian dollars, or about 1.3 billion US. The offer doesn't include the acquisition of any of Austal's core Australia operations. Based in Australia, the Philippines, and Vietnam, the company said. The strategic shipbuilding agreement entered into with the Australian government last year, which appointed Austal as the nation's strategic shipbuilder for key defense vessels, is also unaffected by the proposal. Hanwha last year was given approval to double its stake in Austal to 19.9% after an earlier unsuccessful attempt to buy the entire company. So Australia, with a little bit of protectionism here, they want to maintain some domestic shipbuilding, as does the United States. Hanwha tried to buy the whole company. Australia said no. So they're like, how about we just buy your U.S. operations? And they said, cool. Austal has substantial operations in the U.S. that sells ships to the Navy and the Coast Guard. Its American unit is based in Mobile, Alabama, with service centers in San Diego and a technology center in Charlottesville, Virginia, according to the firm's website. Almost 80% of its revenue is from the U.S., data compiled by Bloomberg shows. In a separate trading update Tuesday, Austal said that the U.S. division is expected to post a 175 million Australian dollar loss because interest and tax in fiscal 2026 stemming from legacy contracts. And I think those legacy contracts, that's almost certainly the Independence-class littoral combat ship, which was a failure and a fiasco. Most of those hulls that were ever built have already been decommissioned because they were just too expensive to operate and they have very little capabilities. So the South Koreans are investing in U.S. shipbuilding, buying a big chunk of operations away from the Australians. Meanwhile, we got this one in oilprice.com this morning. Libya weighs force majeure after drone attacks on the Zawiya oil hub. Another part of the world where they're blowing up energy infrastructure. Libya's National Oil Corporation may declare force majeure on exports from the Zawiya oil terminal as a result of drone attacks on the facility. The Zawiya terminal has a daily capacity of 120,000 barrels sourced from the country's largest oil field, Sharara, which can produce up to 300,000 barrels daily, Reuters noted in a report on the possibility of a force majeure declaration. According to reports, a drone strike had destroyed a storage tank, and another drone had targeted an oil blending facility at the Zawiya terminal. The tank, according to the company operating the facility, had 4.5 million liters of gasoline inside. The destruction of the tank and the fuel could make a local fuel shortage more severe. This is the third drone attack on the oil terminal over the past few days. Over the weekend, a drone crashed into a naphtha tank at the Zawiya refinery, Reuters reported, causing a leak that was contained. Reports have not mentioned the attacking party. Libya's oil infrastructure is the frequent target of various forms of pressure by groups fighting for political control. All right, so maybe that's contributing a little bit here to oil prices this morning, although I guess some guy saying a thing in Pakistan about a deal that we all know isn't coming is more important than oil infrastructure blowing up in Libya this morning. Now on copper, this is interesting. Indonesia's copper shipments delayed by Gresik smelter outage. All right, copper prices already at all-time highs here, so this is probably not going to help. Copper shipments from Indonesia are suffering delays after the smelter that processes ore from the giant Grasberg mine was halted because of a boiler leak over the weekend. Buyers of copper from Gresik, a plant that processes ore from the mine jointly owned by the Indonesian government and Freeport-McMoRan, were informed the smelter will be closed for assessment and repair over the coming weeks. People with knowledge of the situation said, asking not to be named as they're not authorized to discuss the matter public. Now, this is interesting because they're saying over the coming weeks, and this is a problem with a boiler. So they don't really, it sounds like they don't know where the leak is, and they're not willing to provide a timeline for when it might come back online. And this is important because this is something like 2.5% of global copper smelting capacity. These guys produce a lot of those refined copper cathodes. Gresik's operator, PT Smelting, is jointly owned by Mitsubishi and PT Freeport Indonesia, an entity owned by Freeport and the Indonesian government. Mitsubishi Materials confirmed that operations at the facility are currently suspended after a breakdown on August 8th. The timing for resumption is yet to be decided, the company said in response to Bloomberg queries. Representatives for PTFI and Freeport didn't respond to requests for comment. And again, copper prices, we're looking at daily candles here going all the way back to 2022. Copper's been on a steady march higher, a little bit of volatility up and down along the way, but we're sitting here just shy of all-time highs at $6.65 a pound here in the U.S. It's only marginally higher this morning, up a penny and change on this news. But if this delay presses on for several weeks, we're going to see this chart move even higher. All right, last one of the day. Trump media posts $238 million second quarter loss as crypto declines. Trump Media and Technology Group on Monday reported a net loss of more than $238 million for its fiscal second quarter on revenue of less than $2 million. Some of you mathematicians out there, mathematicians, you guys want to do a little bit of the calculation here. What are those margins? $2 million in revenue, $238 million in losses. Margins are not good. We'll leave it at that. That loss, which dwarfed the almost $20 million it lost in the same period last year, was primarily due to declines in non-cash assets, including more than $190 million in losses from digital assets pledged, and equity securities, the company said in a press release. Oh, apparently those Trump tokens lost a little bit of money or something like that. Who knows? Or maybe World Liberty Financial tokens. Maybe they bought some of those. The company's $1.7 million in quarterly revenue mostly came through ad services on Truth Social. That's their flagship social media product, which is used by President Trump. That revenue marked an 89% increase from the year-ago quarter. All right, big things happening at Truth Social, but their quarterly operating expenses of more than $165 million were 275% higher versus a year ago. So, yeah, their operating expenses are rising faster than their revenue is. The company also provided new details about Truth API, its controversial new service offering faster access to Trump's Truth Social posts. And Trump Media said that it has signed more than 10 customer agreements to date, adding that those clients are primarily high-frequency trading firms and are paying rates of $60,000 to $100,000 a month, the company confirmed. All right, insider trading as a service, that's what that is. The president's market-moving posts on Truth Social about a deal or not a deal, or we're going to invest in this company and not in this company, which absolutely moves the value of commodities and stocks. They are selling early access to high-frequency traders. How is that not the very definition of insider trading? And it is being done out in the open, proudly so, by a sitting effing president. And you think the SEC is going to protect you from fraud in the ABS market by data center operators? Guys, again, understand, it is the Wild West of finance. There is no sheriff who is going to protect you. There's nobody riding to the rescue. It is a free-for-all, and unfortunately, crime pays. Crime pays really well. I mean, look, the guys at Magnetar Capital made billions on CoreWeave. The CoreWeave founders are all billionaires. And all that was a special purpose vehicle set up by Nvidia to inflate their freaking revenue numbers. And we know it's all destined to fail. By the way, CoreWeave reports earnings after the bell today. That's going to be fun. So yeah, this is going on. Oh, and the other thing, what else they have? They're buying a fission company. Let's see. They want to focus on their media business in a pending merger with TAE Technologies, the fusion energy firm. McGurn said on Monday earnings call that the combination with TAE is the single most important driver of long-term value for the company. There are currently no commercial plants producing electricity using fusion technology, and nobody's even close to freaking doing it. What a joke. Guys, look, I have no position in Trump media. I went short Trump media shortly after the announcement of that merger with TAE Technologies. The trade did really well. I covered it a couple of weeks ago. I'm not currently short or long this company. I have no position in this company. I would not short it right now, personally, even though I think this company is garbage, because crime pays, and I think crime is going to pay well. The SEC is not going to stop this. I'd be amazed if they did. So they're probably going to see explosive revenue growth as people sign up for this insider trading service. That being said, this insider trading service, the long-term value of this or the medium-term value of this is zero, because once President Trump leaves office, nobody's going to pay for early access to his tweets anymore, and nobody else is even on True Social. It's like Donald Trump and 4 other guys. When Elon Musk bought Twitter, True Social became completely irrelevant. And so this company is a zero long-term. They're not going to create fusion. True Social is worthless, and the shitcoins that they stockpiled are losing value really fast. So this will be a short opportunity in the future. I just think in the short term, probably going to make a lot of money off of their crime as a service business. Yeah, guys, how did we get here? I mean, man, this is really, really bad. That you've got a sitting president is selling access to hedge funds and high-frequency traders of his market-moving posts. That is freaking disgusting. All right, I don't care who you voted for, what party you subscribe to, and don't be like, oh, whataboutism, and Hunter did his thing with the art. Yeah, that was all gross too. That does not excuse this. This is terrible. Man, particularly doomy this morning, weren't we? Hey, I just want to say thanks, everybody, for having your coffee with the Melonheads this morning. Don't forget the like button and the subscribe button so we can do this all again tomorrow morning. Thank you also to my magnanimous Melonhead members on YouTube, Patreon, and Buy Me a Coffee for supporting the channel. You guys rock. Links down below should you feel so inclined. Hi, Mom. Hi, Dad. Love you guys. Everybody, till next time, live small and dream big.